Hello everyone, this is Dibhyush from Imaticus Learning. Today, in this brief session, I will discuss about securities underwriting. Who is an underwriter? What do they actually do and how do they get paid? So, see the slide. Securities underwriting, bridging companies and investors. So, investment banks are nothing. They are just an intermediary between the company who needs money and investors who is looking for opportunities to invest money. And they are the intermediary between them. Now, what is the challenge? A company needs capital. So, in this entire PPT presentation, we will be talking about a hypothetical company, Innovate Solutions. So, see the first image. Looks pretty well. The company, Innovate Solutions, is a tech startup with a groundbreaking AI product ready to revolutionize the industry. So, there is a company, Innovate Solutions, and they are a tech startup. They have some AI product. They are ready to revolutionize the entire industry. What is their need? See the second image. What is the need? They require $50 million. Why? To scale production, expand marketing reach, and hire top talent. In AI, top talent hiring is very important, right? To accelerate growth. Now, what is the complexity of this? See the third image. Directly offering securities to the public is a complex exercise and risky too for a young company because they do not have any established market presence or track record. What if investors don't buy? Then it's a big failure. Here comes investment bankers. Enter the underwriter or investment banker, the financial intermediary. Who are they? See, an investment bank, hypothetically, global capital partners, they are serving as the underwriter and they are connecting companies with investors. What are they going to do? They will first assess the company's valuation and financial health. They will analyze what are the market conditions and timing. Is the market ready for an IPO? Right for an IPO, like right now, everything is crashing in the markets today, right? Because of the war that is happening in the Middle East or West Asia for us. In that situation, IPOs may not be a very good choice. So they will assess everything. Third, they will measure investors' appetite and demand, that whether the investor demand is there or not for such kind of a product. And fourth, they will manage the entire IPO process from start till end. Now, what is the underwriting agreement? It is a commitment. That's why it's called underwriting. It's called a commitment. Firm commitment. Firm means you cannot back out of it. So see, in the first table, what are they telling? Global capital partners, the underwriter is giving a firm commitment, underwriting. They agree that they will buy all $50 million. Innovate Solutions want to sell $50 million, right? Global capital partners will buy the entire $50 million stock at a predetermined price. The price will be agreed. Now, what does this do? See the second table. This immediately ensures a risk transfer because now global capital partners take on the financial risk. If shares cannot be sold, who will be having the loss? Underwriter and not the company. What is the benefit for the company? See the third one, guaranteed capital. This arrangement guarantees Innovate Solution receives 50 million upfront. What happens in the market? Problem of the underwriter, global capital in this case. Sometimes because the issue size may be too big, lot of underwriters, investment banks may come together. That is called syndicate. See the first point, formation. For large offerings, the lead underwriter, lead means the main one, who's principally dealing with the client. They form a syndicate group with other investment banks. What happens here? Risk distribution. Instead of one investment bank taking a very big risk, the risk gets spread across multiple institutions. And of course, you can use the leverage of, you can leverage the network. Now, this all is done. Now, what will an underwriter do? He will generate investor buzz. First point, C, he will create the prospectus, comprehensive prospectus. He will put their company's financials, business plans, what are the competitive advantages and associated risks. He will also do presentation. He will present this to institutional investors, big players, domestic and foreign, including pension funds, mutual funds, hedge funds in India, LIC. Then he will gauge demand assessment. He will see what is the investor's interest, answer questions, whatever institutional investors or other investors ask, and build momentum for the company Innovate Solutions stock to be listed. Now he will price the IPO. This is the most important decision. He will have to decide at what price the company's product will initially sell in the market. So he will set the price. See, in the first image, based on roadshow with institutional investors and current market conditions, IPO price will be carefully determined. You do not want the price to be too high. Neither do you want the price to be too low. What is the challenge in all this? See the second image. Too high a price means shares might not sell at all. Very expensive. Too low, company raised less money. And here, of course, expertise is needed to find the optimal price. On the big day, they will launch the IPO. Shares will be allocated to investors based on their interest, and they will be listed on an exchange. In US, maybe New York Stock Exchange or NYSE or NASDAQ. In India, maybe BSE or NSE. Job remains the same. What is the profit of the underwriter? Difference spread. They generally buy at a different price and sell at a little higher price. Also, they take commission, underwriting commission, because they are guaranteeing the company Innovate Solutions that we will give you money. So some form of commission is taken. Both is the profit of the underwriter. Risk management. Now, this entire role is the underwriter. See the key responsibilities. Comprehensive assessment of offering risk. They tell that what are risks are we offering. They give strategic advice to company on what should be the security type. They will time the recommendation when and price optimization. And of course, don't forget underwriter's own reputation is on the line. So it creates thorough incentive for due diligence. JP Morgan, Goldman Sachs, Morgan Stanley, they all act as underwriters, even in India. Their own reputation is on the line. They will do thorough due diligence. Now, of course, it's a win-win scenario for how? For the company, see the first table. They will secure the necessary funding. For investors, they gain access to a promising new company. For underwriters, they earn fees, underwriting fees, and also the spread for their expertise. So that's it for this session, guys. The number is provided at the bottom of your screen. For any professional certifications, CMA, ACCA, CPA, FRM, CFA, offline or online, you can contact on the number provided. So that's it for this session, guys. Thank you for your time. We'll see you again in next session. Have a good day.